Afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us as always to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get things started today, some good news. Will actually end on a little bit of positive note, hopefully. But to recap and to get us started, let's recap what happened this week in the markets.
Yeah, on the cattle side of the equation this week, cash cattle were nearly $3 lower this week. When we look at those feeder cattle auctions around the country this week, they were steady to $3 higher. On the futures side, the live cattle August contract was down $3.15, and the August feeder cattle futures contract closed down $1. Choice box beef continues to tumble down $75 this week. That still leaves it nearly $75 above a year ago levels. On the hog side of the equation, cash brown gilt prices were down $6.70 this week, and the July lean hog futures contract closed down $2.75. The pork cutout value was also lower, down $14.40 on the week, despite what was a week of some higher belly prices.
I think it's interesting as we get into, we've talked a lot about this recovery to slaughter capacity and how important that is to both the beef and the pork sector. As we look at numbers this week, really we continue to climb and we continue to move our way back toward those pre-COVID-19 levels.
Yeah, so I like to remind folks, if we just backed up the tape recorders about a month ago and talked about what kind of length of time the recovery would take, none of us would have suggested that weekly hog slaughter this week would be above year-ago levels. So it points to me a little bit to the resilience of the processing industry. So we are expected to slaughter 2.452 million head of hogs this week. That's nearly 26% above week-ago levels, and again, 1.7% above year-ago levels. On the cattle side, 636,000 head estimated for this week. That's 21% higher than a week ago, and just a decline of 4.4%. So I think when you see the change in both the choice box beef price and pork cutout value, you realize that some of that increased slaughter numbers are certainly hurting on the meat side of the equation.
Is that also starting to drag both of those in as we look at what's going on with cash prices? Because we saw there's been a massive decline in both beef and pork in recent weeks.
Yeah. So I worry, and I'm glad we have some positive news on the general economy, but I've been worried that we're starting to get this demand drag affecting us as wholesale prices have moved so much lower. And again, I will say I worry about what happens at the farm level if we continue to see that choice box beef and pork cutout value continue to fall as we move forward.
A pretty big week, or as we take a look on the trade side of things, there continues to be some positive news there. Maybe not so much on the beef side of things, but I think there's some pretty good news as we look at some of those numbers on the pork side.
Yeah, absolutely. We got monthly meat exports for April out this week, and I will say it's nice to see the dollar maybe weakening a little bit, helping us be a little more competitive against some of the currencies that matter on the trade side. But if we start on beef, for April, we were down about 8 million pounds relative to a year ago. That was despite what was almost 27 million pound increase to Japan. So some good news buried in, even though that was down slightly. And overall, year-to-date beef exports nearly 7% above year-ago levels. To me, I think that's the helpful side. The pork numbers continue to look good. I will say we had a little bit of a slowdown when we look at April. Total pork exports up 117 million pounds. That compares that we were up 186 million pounds in March. China continued to look fairly good in April, up 181 million pounds. We had declines in places like Mexico, South Korea, and kind of what's dubbed everybody else in the world. When you look at that overall pork export number, 35% above year ago, year to date, is one of the reasons why we can talk about a better situation when we look at the hog side of the equation.
Before we had talked last week, there was kind of some more tension on trade issues with China. It looks like those have been walked back a little bit this week. Does that potentially help us to keep us more on target to meet those phase one trade agreement requirements?
I think it helps. I think, it's still a tall order to get to those phase one levels when you see everything in total. And I guess I say that going, to me, that's a positive because they're going to have to import a lot of products from us. And I think pork can be one of those on the plate that could certainly grow. So again, I'm glad to see a little less tension as we've gone through the week. The last thing we need is to lose, that China market. When you just take a gander, so total year-to-date pork exports, 694 million pounds, of which 666 million pounds went to China.
I think the best news we get to talk about this week, and we have continued to talk in our COVID-19 coverage and webinar series, is about how the economy rebounds. Unemployment numbers came out today. Man, that was a good number to see after last month.
Yeah, absolutely. And especially relative to those pre-report estimates, Megan, unemployment rate. Now, I remind us, a 13.3% unemployment rate. Think about where we were not that many months ago. But the good news is, pre-report, people were saying we'd be near 20%, with some actually suggesting over 20% unemployment. So instead of losing that roughly 8 million jobs, we gained 2.5 million last month. I mean, there's nothing but good news there. We need that to continue. I think there's some opportunities for maybe more of a V bottom given what we saw today, but I don't think 1 point necessarily makes a trend I'm going to get overly carried away with.
Let's talk a little bit about how that potentially sets up the rest of 2020 as it relates to domestic demand. We've talked about that recovery. It doesn't need to be an L shape. So where we see a flat line across, we'd like to see at least a U, even better yet to see a V recovery. How does this potentially set us up for the rest of this year?
Yeah, so maybe in a more positive way, and I think of it this way. So I think we're kind of in this period where food service is trying to recover, and it gives us some strength in terms of demand. But I was always worried that eventually the loss of income and loss of jobs would create drag once we got kind of open, if you will. And to me, that is a little less likely given where we're at now. So I think that's some positive news we can take away from that. Again, I don't want to be too ecstatic, but this is certainly the move we needed to see to make us be more positive.
On the flip side of that, does that potentially set us up maybe to not have another round of stimulus funding? And is that okay if we're able to recover fairly quickly?
Yeah, so you ask a good question, and I think Congress is certainly going to be paying attention to, what the economic situation is as I think about future rounds of stimulus. I guess all else equal, maybe a little less likely to see another round of stimulus given the news we have today. I still think it's probably reasonably likely we're going to do something in some segments of the economy as we move forward. Agriculture in particular, it's kind of hard to say. I'll just remind us that when you look at where prices were and where they are today, I think, yes, farm income is going to be down significantly still in 2020, but that $16 billion in CARES Act money headed to agriculture may put a fairly strong dent in it. Now, if you ask me my concern, what happens in 2021? If we don't do stimulus, we don't do MFP, that's a significant decline, and I don't see a lot of rebound in cash receipts to make up the difference.
Scott, last thing for us to talk about today, Restaurant Performance Index. As we take a look at that, any surprises as we look at that number?
Well, so if you remember, So we have April data now. March was the first time where we got to see restaurant performance index in a COVID-19 world. And we went from a February 101.9 index to a March 95 index. Quite a change. And that's well below the low that we saw back in the 2008 period of time. So this month with the April numbers, we got a 94.9. So we fell really hard in March. It's nice to see kind of a flattening of that. I could see some May numbers actually move up from that April number as we move forward, just given what we're seeing in terms of the opening of restaurants around the country.
All right, Scott, to wrap us up, preview of next week's reports.
Yeah, so we get retail prices out midweek. I'm curious to get a WASDA report on Thursday and see what they do for meat production now for 2020. And we end the week with consumer sentiment.
Sounds great. We will talk to you again next Friday. Have a great weekend.
You do the same, Megan.
We have our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can submit questions and comments there as well. For market updates twice daily, check out John Perkins' Market Minute. And for all of the great Brownfield podcasts, visit our website, brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.